What are the key risks associated with the Indegene IPO? Now that's a question that's been making the rounds. Today, we're going to delve into this topic and examine the top 10 risks that potential investors should be aware of before subscribing to this particular IPO. The first risk is the company's dependency on the life sciences industry. As a provider of digitally led commercialization services, Indegene is heavily reliant on the ebbs and flows of this industry. Any significant disruption or downturn could have a sizable impact on the company's fortunes. Secondly, there's a concentration of revenue from subsidiaries. This might not sound like a bad thing at first, but it does mean that the company's financial health is tied to a small number of entities. If one of these subsidiaries were to falter, it could spell trouble for Indegene. Third, we have to consider the competitive market dynamics. The life sciences sector is a fiercely competitive arena, and staying ahead of the game is no easy feat. It'll be crucial for Indegene to continue innovating and differentiating their services to maintain a competitive edge. Next up, the fourth risk is the potential inadequacy of disaster recovery plans. In an era where digital threats and natural disasters are increasingly common, having a robust disaster recovery plan is essential. If Indegene's plans are found wanting, it could lead to significant operational and financial disruptions. The fifth risk is the impact of delays in revenue recognition on margins. If there are delays in recognizing revenue, it could squeeze margins and put financial pressure on the company. The sixth risk involves challenges in attracting and retaining qualified personnel. The success of any company hinges on its ability to attract and retain top talent. If Indegene struggles in this area, it could undermine their ability to deliver on their business objectives. Next, we have the risk related to underbidding work orders. If Indegene underbids on a work order, it could end up costing the company more than anticipated to fulfill it, which could hurt profitability. The eighth risk is potential fines for late statutory payments. Falling behind on statutory payments could result in penalties that could eat into the company's bottom line. The ninth risk is the company's potential inability to manage growth. If Indegene is unable to manage its growth effectively, it could overextend itself, leading to operational inefficiencies and financial strain. Finally, the 10th risk is the potential for adverse changes in government policies. Changes in regulation or policy could impact Indegene's operations and profitability. In summary, the 10 key risks associated with the Indegene IPO are dependency on the life sciences industry, concentration of revenue from subsidiaries, competitive market dynamics, potential inadequacy of disaster recovery plans, impact of delays in revenue recognition on margins, challenges in attracting and retaining qualified personnel, risks related to underbidding work orders, potential fines for late statutory payments, the potential inability to manage growth, and the potential for adverse changes in government policies. These are significant risks that potential investors should carefully consider before deciding whether to subscribe to the Indegene IPO. Remember, every investment comes with its own unique set of risks, and it's crucial to do your due diligence before making any investment decisions.